This is a video about a unique trading indicator known as Stochastic Supertrend by the creator Big Beluga. It's a tool that you can use to find some really clean and clear turning points in the market's momentum. We're going to go over what this indicator is and how you can use it in your trading. If you happen to find value in this video, remember to leave a like. Now, to get started with this indicator, you first of all want to go to TradingView, the trading platform that I'm going to be using. If you need to sign up, there's a link in the video description for you to do that. Next, you want to load any chart you like and then click on Indicators, then type in Stochastic Supertrend. It's going to be this one by Big Beluga. Looking at the indicator, the first thing we're going to see is this white line traversing the indicator window, and it is called the Stochastic RSI line. Now, in the context of this indicator, the Stochastic RSI is really useful because it helps measure the momentum of the market, giving you a smoother and clearer picture of what's going on. The next component we have here is the supertrend on the Stochastic RSI, which we can just call the supertrend. It's plotted around the Stochastic RSI line, basically sandwiching it, and it changes color. It's going to be green for areas of bullish momentum and red for areas of bearish momentum. Then we have these up and down arrows. These are basically printed whenever the Stochastic RSI and the supertrend crisscross. So when the white Stochastic RSI line crosses above the supertrend, a green arrow is going to be printed to indicate the start of bullish momentum. And of course, the red downward arrows are printed whenever the Stochastic RSI crosses below the supertrend, indicating the beginning of bearish momentum. Finally, we also have a center line, which is located at the 50 point on the indicator scale, just to give you a quick idea of when these lines are in bullish or bearish territory. Next, if we go into the settings of the indicator, let's take a look at the inputs. Here you can change the RSI and K period lengths, but I'm going to leave them at the default of 14. Then there's the smooth setting. By default, this was set at 3, but I want you to change it to 5, which is a little change I like to make. The multiplier is set to 10, which controls the sensitivity of the supertrend bands. Then you have the options to change the colors for bullish and bearish momentum. If you click on the Style tab, there are several options that you can toggle on or off, but it's mainly just a bunch of checkboxes to enable or disable different visual features. For now, we won't change anything here, so just click OK. Now, for how we can use this to trade. Obviously, with a tool like this, you can't just use it alone. A better way to use it is to create a full strategy, which is what we're going to do now. First, we're going to add a second indicator known as the Market Oracle Pro by ChartPrime. Once you have this indicator added, we need to adjust its settings. There are a few things we're going to activate. First is the dynamic reactor. You want to enable that, and it's basically going to draw this trend ribbon on your chart to tell you when the market is in a bullish or a bearish trend. The other thing we're going to activate is the momentum wave bands. That is going to show these wave bands that will act as a tool for us to identify extreme market scenarios within trends that we can use as initiation points for taking positions. And of course, we want to disable a lot of things that would give noise on the chart. So in the Style tab of the Market Oracle Pro, we're going to disable the buy, the strong buy, the sell, the strong sell, and the plot candle. Over in the Inputs tab, we'll also disable the candle highlighting option and the take profit option. Once you've done that, you can click OK. With these two indicators combined, we're going to create a strategy that has a high success rate and at the same time is simple to follow. So here's how you take a long position. Condition number 1, you want to identify a bullish trend using the dynamic reactor. That's this trend ribbon you see on the chart. If it's green like this and angled upwards, it means the market is bullish. That's step number 1. Number 2, once we have the bullish trend, we want to look for a market pullback, and that pullback needs to be strong enough. How do we know it's a strong pullback? Well, simple. You see these two wave bands from the Market Oracle? We want the price to come down and get as close as possible to the bottom wave band. It could even touch it or close inside it, but it just needs to get close while we are still in a bullish trend. Our next condition is to wait for a buy signal to be printed by the Stochastic Supertrend indicator. A buy signal is that green upward arrow, which indicates the start of a strong bullish momentum after the pullback. And for the last condition, you see the candle that was printed with the buy signal? For this entry to be valid, this signal candle should close above the green trend ribbon. If you get a buy signal but the candle closes below the trend ribbon, that entry would be invalid. We would take a long position right here. You want to put your stop loss at the most recent swing low, but give it a little breathing room so it's not too tight. Then you want to set your take profit at 1.5 times your risk. We let the trade run, and as you can see, this trade was profitable. And for a bearish setup, you just look for the opposite. The trend ribbon would need to be red, you wait for price to pull back up close to the upper wave band, then you'd need a red sell signal from the stochastic supertrend, and the signal candle would have to close under the red trend ribbon. Now, just to give you an idea of how powerful this strategy actually is, I'm just going to keep scrolling slowly without skipping anything. Right here, we had another trade. The trend was bullish, the trend ribbon was green, the market did a pullback, and it got close enough to the bottom wave band. After this pullback, we waited for a buy signal, which was printed on this candle, and this candle also closed above the trend ribbon. If you were to take this trade, you can see it was profitable. We keep scrolling, and here we had another trade. Trend is bullish, market does a pullback, and it gets close enough to the bottom wave band. After this, we waited for a buy signal. Here we have the signal, and the signal candle itself closed above the trend ribbon. So if you were to take this trade, it would have been profitable. We keep going, the trend is still bullish. Here we had a long position. During this pullback, this candle got close enough to our bottom wave band. After this pullback, we had a buy signal on a candle that closed above the trend ribbon. And that trade was profitable. Now right here, the trend changes to bearish, and you might think we had a position here, but let's check. We had a bearish trend, which was good. Price did pull back up, almost touching the upper wave band, which indicated the pullback. And then we had a sell signal on this candle. So why didn't we take a short position? Well, because one of the conditions was not met. For a short position, the signal candle is supposed to close under the red trend ribbon, which it didn't, so we couldn't take the trade. We keep scrolling, and finally, here we had another one. You can see bullish trend, a pullback gets close enough to the bottom wave band, and then we have a buy signal on a candle that closed above the trend ribbon. And that trade was profitable. Now, one thing to remember is in order to get access to the Market Oracle Pro indicator, this one that gave us these wave bands and the trend ribbon, you just click on this link, which is pinned in the video description as well as in the comment section below. In summary, this strategy combines the clarity of the stochastic supertrend's momentum signals with the trend and overextension analysis from the Market Oracle. By waiting for all the conditions to align, the correct trend, a deep pullback to the wave bands, a signal arrow, and a confirming candle close, you can build a very robust and complete system. Now, remember, this is not financial advice. This strategy shown here is just for educational and informational purposes. You should always add your own discretionary judgment and do your own thorough backtesting before trying any new strategy. If you found value in this video, remember to leave a like, or even better, consider subscribing to stay tuned. Thanks for watching. See you next time.